Hey guys, what's going on? This is your boy Christian Israel, and you are tuning in to the New Creation Capital Podcast, a place where we discuss what happens in the world today. We talk about stories that focus on current events, the stock market, and digital assets. This is a new you, a new future, and a new creation. Thank you guys so much for tuning in. Today is April 7th. I'm going to change up a little bit. I'm going to start releasing the videos at the end of the day so we can catch up on the news for the day that's going at the end of the market close. I hope you guys are doing well. I hope that you are buying low and selling high, and that you guys are all making money and trying to make it through this pandemic and financial crisis that's going on. Today's stories are going to blow you away. Today's story topic is, are we in the big short? Part 2. Are the European banks going to crash? Are the U.S. banks going to crash? Well, according to the guy who was the star of the movie The Big Short, it is not if, it is a when case that's going to happen. Thank you guys for tuning in so much. Of course, you can make sure you can hit us up on Apple Podcast, Breaker, Google Podcast, Pocket Casts, Radio Public, Spotify, of course, the Anchor platform, and we are now on the YouTube platform showing the visuals of everything we talk about. Thank you to all the new subscribers on YouTube, all the followers that are happening on our actual audio podcast. Thank you so much. Also, thank you for everybody who is hitting us up on Twitter. You can catch us at Twitter at New Creation Cap. Thank you for the followers. You can kind of see everything we're going from our TA to just news go throughout the day of people that we retweet or information that we find and tweet as well. Also, as I've said before, you can find all of our stuff on Publish 0x, the number 0, I almost said the letter 0, the number 0x.com/new-creation-podcast, or just go in the search bar and type in New Creation Podcast, and you can find us. You can see yesterday's story was episode 15. We are on episode 16 today. If you didn't get a chance to catch it yesterday was humans as currency was the topic. Was it money or control? And are the banks double dipping with the Small Business Association loans? Yesterday's topic, hot information for you. Please go check it out. Thank you so much. So let's move forward and dive into what's going on right now in the Bitcoin world. Yesterday, guys, as you guys know, we topped 74.81 yesterday. Quite hit the top. If you're watching this, you can see this little white line right here is the top of my zone. We're also coming up on the 100 moving average, which is kind of giving us some resistance right now. But you can see that's my top. That's my sell zone. You sell, you short into resistance. You sell into, you buy into support. So that's what you can see here. Back on March 29th, my hit perfectly. The little red spots are where I'm expecting a breakout. I thought we were going to break out. We are breaking down now. And so I'm currently in a short. Of course, I still hold Bitcoin, but I'm in a short. And right now we are sitting at 71.47. And this is on a 12-hour candle. So we've got 2 hours and 30 minutes at the time of this recording left on this 12-hour candle. So we could be breaking north. We could be breaking south. Right now I'm in short just based on basics. You always short into resistance. That's just kind of how I look at it. Not financial advice, just something that we do here at New Creation Capital. All right, let's look at XRP, because you know we are an XRP-centric channel. Love XRP. We think that is the future. Ripple Labs is the future. What's the future is now. It is also a new creation of technology, a new creation of currency. So when you hear the word New Creation Capital, right? New capital is money. Also, new creation is a Christian word for those who believe in Jesus. So it's kind of a mix of the both. So you got your believers who are born again, and you also have the new creation of the digital dollar, the new creation of a cashless society. Okay, so let's jump into XRP and Ripple. Right now, we're sitting, according to the Kraken, which that's what I trade on, 16.2 cents sitting right now. Yesterday, we are almost touched that 0.702 fib, but we got held down by the 100 moving average and topped out, looks at 20.5 cents. I was looking to break, but we retraced about a cent down. Currently hitting off the 8 moving average. So we got some movement there, not too much. We still broke over the 20 cents, sitting back under 19 cents now. That's all right. We're slowly creeping up through this channel. So if we can keep moving up at a steady pace, expect a small retrace. Some people are calling for 8 cents, 10 cents, 12 cents, 6 cents. I think if we retrace, just personally, our first stop's going to be 18.1 cents. And then if we fall through that, then we'll talk later. But on our retracement, I'm expecting around 18 cent XRP for retracement, okay? Now, let's move on to the market and see what's going on today. In the market today, I do believe my computer's the internet's going a little slow today. I don't know about the rest of you guys, but our internet has slowly been kind of backtracking according to, what do they say? They have to slow down the internet now because they're afraid that too many people are going to use it. So right now it's not showing when I reloaded it. But what I can tell you is that most of the market closed below 1% today. So if you know that again, XRP is down, Bitcoin is down. The market slowly closed down today too. I know the argument is, oh, we're going to separate ourselves from there. However, that doesn't seem to be the case. When the Dow Jones goes up, Bitcoin goes up. When the Dow Jones goes down, Bitcoin goes down. Oil is also down again today for the third straight day. You can see here actually on the front page, it's funny because this wasn't here before I reloaded. It says, big short investor who made a killing during financial crisis. Economic shutdown is worse than the coronavirus. So I see here, by the way, that's kind of our story of the day. Our story is, I'm going to show you a clip from CNBC where Steve Eisman, I think his name is, the guy who's basically the movie The Big Short, has stated off. I happened to watch that last night and started looking into some things. And we came across a couple of interesting articles, one this morning by the New York Times and one past some other articles from the past few months. And then I was Googling and searching, came across this interview that has become the story of our day. Okay, the interview is by Steve Eisman, that's his name, of The Big Short on CNBC. It's from October 15th, 2019. And it's about 10 minutes. Well, I'm going to play the 12-minute interview for you here. And then we're going to break it down because this is in October. And now we're in, that's the start of the fourth quarter, right? And now we are in the second quarter of 2020. Let's see if he's right. So the question is, are banks falling? Are EU banks shorting? Are US banks going to short? So let's jump on in and see what he has to say.
You may know our next guest from The Big Short. He was one of the investors who shorted the housing bubble before it crashed more than 10 years ago. He is now eyeing a few names that he is shorting this time around. Let's bring in Steve Eisman of Neuberger Berman. Steve, welcome back to Fast Money. Great to have you with us.
Thank you. Good to be back.
Obviously, for The Big Short, that was sort of a macro call. Are there macro shorts in this market? Are there big bubbles? Are there inefficiencies that you see?
I don't see a systemic problem. The banking system is in the best shape of the 30 years I've been analyzing banks. Is there going to be a recession next year or the year after? I don't know. I mean, I think we are in a global industrial recession as we speak. That's not the same thing as a recession because industrial companies are about 10 to 15% of the economy. But I think when the industrial companies report, it'll be pretty universally weak, almost without exception.
A lot of people have made a lot about how rates have been close to zero or below zero for a very long time. Are there any sorts of bubbles that have formed around that dynamic or no?
I mean, are there pockets of bubbles? I mean, QE to me is what I like to call monetary policy for rich people, meaning it raises asset prices. It has zero impact on the economy. It actually has some very negative aspects to it. In other words, if you're a saver, it's not helping you, it's hurting you. So I don't find QE as helpful to the actual economy. It just causes asset prices to go up. Now, is that a bubble? I mean, the market's not that expensive, so it's not that bubble-ish.
Before he continues, real quick, if you guys don't know, QE, by the way, is quantitative easing. That is printing of the money. Right now we're printing $1 million a minute. So there's quantitative easing going on. So again, if you're a saver, it's bad for you. Let's jump back in.
So I don't find QE as helpful to the actual economy. It just causes asset prices to go up. Now, is that a bubble? I mean, the market's not that expensive, so it's not that bubble-licious, but it definitely has caused asset prices to go up.
Okay. Let's talk about some of your individual ideas. I think that all the times that I've spoken to you over the past couple of years, you've been short Deutsche Bank. Are you still short Deutsche Bank?
Still short Deutsche Bank.
Okay.
3 years. I'm 3 years in running.
Yeah. What will cause you to take off that short? Because it has already hit record low after record low after record low.
The problem Deutsche Bank now suffers from is they're trying to shrink themselves to profitability. And one thing we have learned time and time again post-crisis is that's impossible. And so they're going to shrink, and they're going to become less profitable. And I think the stock goes even lower, and then we'll see.
Does it go under? I mean, this is all happening as...
Banks go out of business for funding issues. There's no funding issues at this time of Deutsche Bank. This is purely a profitability problem.
And is this an idiosyncratic short, or do you also see opportunities to short other, or have you been short other German banks? Like, I mean, Commerzbank.
Not other German banks, other European banks. The problem, when you take a...
He said there he's not been short German banks, but other European banks. Okay, and he says it's not a financial issue, a profit issue. It's banks go broke because of a funding issue. Keep that in mind, not be able to fund.
So with the ECB trying to reflate there, do you think that...
Oh, that's hopeless.
It's hopeless.
Hopeless. QE in Europe, put it this way, zero rates or negative rates, what does that mean? I think it means it's created global overcapacity because every stock buyback has been done, every deal's been funded, every PE has been funded, every venture capital has been funded, every startup has been funded. And so what you have is global overcapacity and deflation. So why would anybody think that doing more of the same thing would cause inflation is utterly beyond me. I think what the ECB is doing is a perfect example of trying to do the same thing over and over again and expecting a different outcome. That's the best definition of insanity.
But that sounds systemically horrendous, ultimately. And the assumption is that the central banks can continue to print money, and therefore it doesn't really matter. Is that really, because again, that's the funding argument? Because we talk about 17 trillion in negative yielding assets all the time.
Right,
that sounds like a bubble.
They can keep funding because, I mean, take a look at Japan. Japan's government debt to GDP is 240%. We're at, I forget where we are now, 125, something like that. So we got 2 times more to go. And whose rates are lower? So, I mean, I don't understand why Japan's rates are lower than ours. I just only know that they are, and they have a lot more debt to GDP than we do. So, you know, what causes interest rates to go up in a world of QE is above my pay grade at this point.
Steve, what do you make of, we were just talking about, zero interest rates, QE. It's obviously great for people who own risk assets. So if you think about what's different this time to, let's say, 20 years ago, as far as technology valuations are concerned, is that we just saw, some companies come to public markets, and they were able to be funded by this zero interest rate environment. And I'm thinking of Uber that had an $80 billion valuation. Now it's about 50. Okay, and then we had WeWork, that was originally at 47.
Bonds at 10%.
And might go to
maybe
zero.
15.
It might go to zero.
Yeah.
So my question is all these companies were funded by this environment. They're disintermediating massive companies that are public, that are profitable, all that sort of stuff. Is that a bubble? Are we about to see the reckoning of that on the backside? Because we're seeing
it's possible that bubble has broken to some degree, in that every single IPO, and I'm not picking on anybody, right. Smile Direct, for example, which I think it went public at 23. Where did it close today? 10, 11. So I think the public's appetite to take private equity out or venture capital out for companies, no matter how good their ultimate business models may be, but that don't make money, I think is, at least for the moment, is done. Now, what's that going to mean for Silicon Valley? Maybe it'll mean, God forbid, the companies will have to learn how to make money.
Some of your other shorts that you've spoken publicly about, Steve, Zillow.
Yes.
And Tesla.
Yes.
What is the short?
I'm still short both of them.
You're still short both of them?
Yes.
What is the short that you are the most excited about?
I'd say those would be 2 of them.
Zillow and Tesla.
I think Zillow has created for itself perhaps the most dangerous business model that I've seen in a very, very, very long time.
Because they started house flipping
Because they're
themselves.
flipping houses.
Yeah.
And, the CEO, I think his last name is Barton, is without question a great internet investor. But I think the example of Zillow is a case of genius is not always transferable. So, for example, some people might think I'm a very good investor, but my wife doesn't think I'm too bright when I come home. And, or you could be a great physicist, but you can't ride a bike. So you could be a great internet platform creator, and I grant you Barton is, but the business of buying homes, flipping them, requires making a good investment decision at a very, very low margin business. And it actually requires managing thousands upon thousands of human beings, because the internet is not going to paint the house for you. A person has to do that. The internet's not going to pull the carpet out of the house. A person has to do that. And this is a business. The problem with the business is that internet platform companies love to talk about the TAM. They wax poetic about the TAM.
Total addressable market.
And the total addressable market. And when they announced this, the CEO went on about the TAM for 10 minutes. I mean, it's like poetry. And the problem is there isn't one TAM for residential real estate. There are thousands of local TAMs, and they're all different. And the ability to make mistakes in every single one is very, very high. This is not a business you want to roll out quickly because it's so local. You want to learn from your mistakes. And this company is doing this so aggressively that it's bound to make a lot of mistakes.
Are either of these shorts, Tesla or Zillow, are these shorts that you basically the bet is that they go out of business in some way? They go bankrupt?
No, that's not my bet. I'm not making that bet. I'm not making the bet that Tesla's going to go out of business. I'm not making the bet. I mean, it's rare to make, especially in a world of zero rates where everybody gets funded, to make a bet that somebody's going to go out of business. I mean, the problem is also when the stock gets to 2, chances are it goes to 6 before it goes to 0.
Do you think there's misrepresentation in either of these stories? In other words, the public is not getting a transparent or an accurate read in the true balance sheet story?
You know, with respect to Tesla, he likes to pull a shtick every quarter because there are 4 things that matter with Tesla. There's the deliveries, there's the margins, there's net income, and there's cash flow. And at least for the last 2 quarters, what he likes to do is tweet that they're doing very, very well on the deliveries, and the stock tends to go up. And then at least the last quarter, the other 3 variables are terrible, and the stock comes down. So I don't know why that's allowed.
Right.
But he played this game again, where he's tweeting how great the deliveries are. We'll see how the rest of the earnings are when he reports.
Sure. Everybody asks you about what you're short because of Big Short fame, all that stuff.
Right.
What's your favorite long?
My favorite long is a company called Motorola Solutions, which is a little obscure, but it's not a small cap stock. It makes emergency communication equipment for police, firemen, etc. And what I really like about it is it's very good management. They're well incentivized. It's an oligopoly, slightly regulated. Business has gotten better over the last couple of years. I don't have to worry about China. I don't have to worry that much about a recession. It's about as idiosyncratic a long as you could imagine.
Steve, great to see you. Thanks for coming by.
Thank you.
Steve Eisman, Neuberger Berman.
Or he could be like me and just have no discernible skills whatsoever. I mean, home, here, it doesn't matter. I mean, at least
You're
he's
never
got
a
something
genius
going.
anywhere.
The Deutsche Bank is fascinating. We've been talking about it for a while. I mean, Steve, when I hear Steve talk, he's short it because it's just a bad bank, and that's good enough reason. My concern would be it's not only just a bad bank. You know, there's a derivatives book there which could potentially be, I hate using the word catastrophic, but there could be some systemic risk along the way. We're going to find out, but I'm with him 100% on Deutsche Bank. Even at current levels, it's still way too expensive.
So I think that's pretty interesting. You heard him say a couple things. One of the things he said he was short on Tesla, and this was in October that showed that it was $235. I wonder what he thought when Tesla at the top of the year hit $1,000 a share. Tesla's currently now sitting at $509, it looks like. Nope, $545. Tesla's currently sitting at $545 a share. So far, it's up 100%, a little under 100% since he shorted it. But Zillow's a good point because that's the housing market. That is, people flipping, people purchasing right now. Interest rates are down low for loans for banks, but refinancing interest rates are not unless you go into a 30-year mortgage. And here's the point is people are not moving right now. No one's moving. Houses are being on the market, but no one's moving. So supply versus demand. You got people who want to buy houses, maybe. People want to take loans, maybe, but no one's doing it right now. So again, that was Steve who saw The Big Short. And if you haven't seen it, watch it. For those who are hodlers, that is the perfect hodl movie. When everyone around you is telling you, you were wrong, they held. And boy, $1.5 billion That's what he made off the housing crisis, by the way, 1.5. So, and the people who were around him made like 40 million. That's worth the hold. So let me know what you guys think about that, because he's talking about Deutsche Bank and that he's shorting the bank. And then he talked about the EU, how it's not going to work. Quantitative easing is not going to work. It's bad for people who save. It's only good for the big guys. And right there, he talked about our GDP to our debt ratio was not that much. Right now, we've already doubled it. We doubled it in the last month, guys. The last month. So this is him in October saying Deutsche Bank is just a bad bank. It's going to fail, and that EU banks are eventually going to fail. And that brings us to our next story. Not our next story. We're going to continue on to this, okay? And so what makes banks fail? I want you to understand that. What makes a bank fail? Banks are worked on debt, okay? Banks, if you have debt, bank works. The banks want you to be in debt, period. The big banks loan to the little banks loan to the smaller banks loan to the small businesses. Okay? Now, we know what happens in Europe eventually happens here. When it comes to the finance, we see the financial district moving. We saw Brexit. We saw the COVID-19 explode over there in Italy and Spain and France, and now we're seeing it here. So if you want to get a good indicator of what's happening in the financial system here in America, let's see what's going on in Europe. Okay, and he talked about Deutsche Bank was a German bank. So I came across this article on The Guardian today, Guardian.com. It was written actually on April 1st, Wednesday, April 1st, 2020. And it's titled, Almost a Fifth of Small Businesses at Risk of Collapse Within a Month. So they're saying by May 1st, a fifth of the small businesses in Europe, I think this is Europe or the UK, we'll dive into this, are going to collapse. Again, so the way the housing market worked is they had these things called CDCs or CDOs, right? And basically these were bad loans, okay? That's, if you watch the movie, the bank was getting paid to give out bad loans to people with credit who couldn't afford it, who could never pay them back. You found people buying houses and the housing market going, because all these loans were given out. Money was being printed every day to people who could never pay them back. Does that sound familiar? Businesses right now that want to get the SBA loans. It's all the double dipping article we did yesterday, is that they only going to give, Bank of America is only giving out loans to the people who are already in debt. Not the people who can afford them. They're giving them to the people who can't afford them. And that's the key here, because the banks, once these people go in debt, they're always going to do high interest rates, and they're going to go in, and once they go in debt and they default on those loans, then the bank that's supposed to pay the upper banks default on those loans. Then the upper banks that were supposed to pay the upper banks default on those loans, and then you're stuck with just the big guys. That's why you saw Lehman go out, right? That's why these top banks are all kind of working together, and you're seeing the smaller ones. I showed you on FDIC a website a couple days ago. We already lost a bank in West Virginia. We lost another bank on February 14th, FDI insured, right? These banks are being swallowed up. And it says here, the study suggests that some small to medium-sized businesses will struggle to secure government cash in coronavirus lockdown. And shout out to Jasper Jolly, who wrote this article. And it says here, excuse me, almost a fifth of UK small businesses are at risk of collapsing within the next month as they struggle to secure emergency cash meant to support them through the coronavirus lockdown. According to research by an accountancy network, the Chancellor, Rishi Sunak, excuse me if I butchered that, has pledged unprecedented aid to companies to try to cushion the blow from much of the economy shutting down, but businesses and politicians have raised concerns that there are gaps in the scheme. Does that sound familiar? They're going to give the businesses in Europe as much money as possible to keep afloat government aid. However, they're worried that they're not going to be able to use it right. I mean, I'm just going to point this out. Right now, 10 million plus jobs have been lost in the last 2 weeks. Filed for unemployment, okay? The stock market has gained 23%. Does that make any sense? How is the stock market going up while people are losing their jobs? Where's the money going to? They're quote-unquote giving money to the small businesses and medium businesses, but really what they're doing is also giving money to the large corporations who are, I I can only go off what happened in 2008, doing the buybacks, right? They're buying back their own stock and it's going up. Because are you putting money in the stock market right now? Are you taking your $1,200 that you're going to get to put money even in cryptocurrency? Let's try there. Let's even say cryptocurrency or the regular stock market. There's a good chance you're not. I know my parents aren't. They're going to put it and try to use it for what needs to be used. Yes, they have money to spend, but they want to make sure they do it. We have our money that's invested. We've moved our money that's invested, and I invest and I trade every day, but I'm not taking the money the government gives me to put it into their stock market. You know why? Because that's the point. That's why you're at zero interest. You heard him talking about interest rates, right? The interest rates are now down. Once you get below and negative interest rates in our banking system, the point is for you to take your money out of the bank and put it into the stock market. They want you to move the money. That's the point. You heard that FDIC, Janelle McWilliams say, don't keep your cash in the mattress. That didn't work out well for some people, right? No, they want you to put your money in the stock market so they can take it. Period, point blank. It's what they do. It's what they've always done. That's why, Bitcoin, quote unquote, was created by somebody. I have my own looks into how Bitcoin was created, but this is why this is a chance for you to change your wealth. Big Short guy, Steve, they made $1.5 billion when everyone told them they weren't going to make any money. They became billionaires and millionaires in a situation because of other people's greed. And right now we're in the same thing. Wall Street is greedy. The banks are greedy. That's why they're charging you money they're getting from free for the government to get the monies back for the small business loans. So he's talking about shorting the banks. So in order to short the banks, you got to see what's going on, where the bank people are giving their money. That is to the small businesses. So it says here, continuing in the article, it says some 18% of small and medium-sized enterprises either probably or definitely will not be able to obtain additional cash from the government to survive for a 4-week period, according to the Corporate Finance Network. Its accountancy firm members estimated that almost a third of their 13,000 small company clients from around the UK would be able to acquire the cash needed to ride out and extend a 3-month lockdown. So they're saying here that even if the government gives them money, it's not going to last 3 months. So they're going to go out of business. The money is the money that the small businesses are going to get, the loans that they have to pay back to the bank at least 5.75% when the banks are already getting it for free, basically. That goes to pay last month. The month that people had to stay home. We've been home for a month now, right? 30 days, depending on what part of the country or world you're in, listening to this in, at least 30 days, right? We've been home. Jobs have been locked down. As a small business owner, we've shut down offices, right? So if I was to get this loan for $250,000, that goes to pay last month's bills. What about the next 2 to 3 months? We're not done yet. Lockdown is extended till May. At least June. To be honest, I think we're going to June into July. I think for the rest of the second quarter into the third quarter, we're going to be locked down. Come start of fourth quarter, we're going to see an explosion. I think that's when the switch is going to get flipped. And we're in a 5G, XRP, digital currency world. It happened a lot faster. I thought it was going to happen next year, end of 2021 naturally. But you know what they say? Never let a crisis go to waste. So what do you think about that? I mean, they're saying here that the challenge now is getting the money out the door to support business before it's too late. There are many businesses who, if we don't quickly access the cash, they are going to go under. The banking industry body, the UK Finance, has said it is running the schemes in line with its government design. In a letter to Sunak, Reeves said the history of the support to the banking sector meant they had to step up. The industry and regulators at the Bank of England has said that the banks are well positioned to support the economy through the crisis. The banks on Tuesday night agreed to scrap dividend payouts to shareholders after Bank of England pressure. It says here, banks were kept afloat by government and taxpayers during the financial crisis, 2008. Reeves wrote, I would urge them to play their part in helping small and medium-sized businesses. Now remember, the banks were bailed out. In this case, the businesses are not going to be bailed out. It's not going to happen. It is not going to happen. Okay? So let me know what you think about that. Let's move on to the next part here. Now, this is from the New York Times today, okay? This article was written, and it's titled, European Banks Prepared for a Crisis, but Not This One. The financial impact of the coronavirus surpasses the old worst-case scenarios, threatening a credit crunch or even a new financial crisis. This is written by Jack Ewing yesterday, April 6th, and he says, it was supposed to be a drill. Government overseers would test whether European banks would survive a hypothetical perfect storm that included a steep economic downturn, plunging stock prices, and a collapse in consumer spending. But before bank regulators could begin their planned stress test this year, they were confronted with the real thing. The financial impact of the coronavirus, visible in shuttered factories, emptied airports, and desolate towns, make their worst case scenario a 4.3% decline in European Union economic output by the end of 2022 seem mild by comparison. So they thought we'd be in a 4.3 decline by the end of 2022. We're already at that, and it's still the second quarter of 2020. It goes on to say, oh man, talk about a worst case scenario sped up. I said again myself, I just said it before we started reading this article, that I thought all this was going to happen next year. This bubble that Steve saw, right, before there was a COVID-19. Anybody else who's in the system, definitely in our crypto system, right? And this is the upsetting thing about being in a space that we are, is that we're betting against the system. That's what it is to be in crypto. You're betting against the system. I'm going to get in that more in our closing today. But we're betting against the system, and I think it's important to understand that. Like, that's dangerous. Anyway, so it goes on to say, some economists expect the European economy to decline by more than 10% in the first half of this year because of the pandemic, threatening an explosion of bad loans, deteriorating assets, and plummeting share prices. There's the key. Bad loans, deteriorating assets, and plummeting share prices. So the banks are overall becoming worth less, which means their stock price has gone down. Then we're also seeing these small businesses default on their loans. We're seeing people getting $1,200 and not working. So there's no money pumping into the economy. This is a perfect storm, folks. Now, I know for those in crypto, this is what we've prepared for, but it's happening. People are losing their jobs. Banks are going to go out of business. The big banks won't, but as always, it's the little guys. And it goes on to say, the question that regulators and central bankers are asking themselves now is whether the measures they took in recent years to crisis-proof the banking system will be enough to prevent a credit crunch, bank failures, and a financial meltdown with global financial implications. I'm curious what they did the last banking system, where one person went to jail for the housing crisis and they continued their crooked ways. What did they change? Hey, if you know what they changed, tweet us at Twitter at New Creation Cap, or right down at the bottom of the comments here, and let me know what the banking system has changed since 2008 and the 2009 financial crisis. I don't know what they did. If you know what they did, please let me know. All right, it goes on to say here, Andrea Ineria, who oversees bank regulation at the European Central Bank, said that the damage has been manageable so far. Is this manageable by quantitative easing? Printing. That is what they're doing right now. It goes on to say, but he said from his home office in Frankfurt, we still have to understand how long this will last and how deep it will become. It says here, banks are under pressure anywhere on the planet that the virus has spread, which is virtually everywhere. The problem is particularly acute in Europe because many banks there never really recovered from the last financial crisis, which began in 2008 with toxic real estate debt, spread to Eurozone government debt, and took at least 7 years to tame. Lenders like Deutsche Bank and Frankfurt are plagued by meager profitability, inefficient operations, and the continuing cost of cleaning up old messes. Ding, ding, ding. Look at that. We just saw Steve on CNBC in October 2019, 6 months ago, talk about Deutsche Bank and shorten it. Boom. Right there. Here it is. Because of 7 years ago, they crapped their own pants. Toxic real estate debt spread to the government, and they still haven't got out of their mess. Period. Banks are like that today. Wells Fargo. I showed you an article yesterday. Wells Fargo talking about we can't give the small businesses money because you guys won't take the handcuffs off of us. Same thing here. So it goes on to say More than the United States, the European economy depends on banks to function. European companies get more than 2/3 of their credit in the form of bank loans, while American firms get less than one credit directly from the banks. They raise the rest by selling corporate bonds or shares. Now, here's the key there, right? They're saying here, the reason the European banks are in more troubles, or the European economy is in more trouble, because the companies depend on the banks to give them credit. So again, if those banks crumble, again, liquidity, on-demand liquidity. They're not going to have enough liquidity to function. So if the banks go down in Europe, the companies go down in Europe. Are they too big to fail? That's what happened in 2008. Who is going to bail the banks out this time? The banks bailed out Wall Street. The banks again are bailing out Wall Street. But now that the banks are running out of liquidity, who's going to bail them out? We'll get there. But it says here the American firms get less than 1/3 directly from the banks. Now they're just getting it from the government. For those who don't believe it, Trump is basically running the Fed now. President Trump is running the Fed. He's printing $1 million $1 million a minute, $6 trillion. I think they're going to do another stimulus package. I think I might have saw. I'll look into that for tomorrow's video. But if you see here, the economy is pumping because the government is putting money into the economy. The government is buying the shares. The government is giving money to the airplanes, giving money to the hotels. And these corporations are still laying people off, but somehow the economy and the S&P, the Dow Jones, the NASDAQ, all these companies they're still down 20-something% on the year, but they're recovering. They've already recovered almost 20%, I think. So you tell me, what do you think about that? I mean, this is just the signs, right? These are the same signs Steve Eisman saw in 2006, 2007, before the housing market crashed and he started to short it and people laughed at him. But we're seeing the signs here. The banks, do we short these banks? And what happens if the banks fell? Do they have a backup plan? Do the banks have a backup plan? And I think we know they do. There's this place called the IMF. We had someone called Christine Lagarde. Christine Lagarde that actually used to be the director of the IMF and also used to push. Remember we saw that where the winds have changed, digital cryptocurrency. We got to move it. We got to shake it. We got to do these things and make people do liquidity. And we're bailing banks out here. We're bailing countries out here. That's the last step. So it goes all the small. Think of it like this, right? You have like a Jenga. The bottom falls out, then the top goes. So right now, all the small countries are being bailed out slowly. We don't hear about it in the main news, but we talk about it on this channel where the smaller companies are being bailed out. Smaller banks are starting to be bailed out or failing, right, by the IMF, giving trillions of loans out and doing unlimited credit. They're using a digital asset to do unlimited credit, to move cross-border payments. The dollar is going to be gone, folks. If you think the U.S. dollar is going to be a world power in the next 5 years, I'll be the first to tell you, which I'm not, because if you're an XRP believer, I'm going to be one of the first people to tell you and put it in stone and say it's gone in 5 years. You see Digital Asset Investor. I talk about him a lot, but he's doing his research and the Bearable Bull. Talk about 2020, the year of the digital asset, according to Brad Garlinghouse, 2020 is the year of the digital asset. They saw this. They had it planned. The World Economic Forum had it planned. This is all planned. And I talk about that, in episode 3, where I say, was the digital dollar planned? Yeah, right there. Episode 3, was the digital dollar planned? That's where you start. Go and listen to it, and you'll see that when we start to dive into it. But let's go back to the IMF and Christine Lagarde, because she used to be the monetary director of the International Monetary Fund, right? Okay. Well, I come across this story that was released on October 18th, 2019. I just want to show you. October 15th, 2019 was the interview with Steve Eisman talking about the European banks are going to crush. Well, fast forward to October of 2019, literally, how many days was that later? 4 days later. 4 days after Steve Eisman comes down and says the European banks are going to fail, starting with Deutsche Bank. I saw this. The European Council of the European Union releases a press. Okay, it says here, it's titled, Christine Lagarde, who I said used to be the director of the IMF, who pushed cryptocurrency to save everything, is appointed president of the European Central Bank. And it states here, Today, the European Council appointed Christine Lagarde to be the president of the European Central Bank for a non-renewable term of 8 years. So she's got to be there for 8 years. She's there. She's gone. 8 years, period. 2 presidencies from 2019 to 2017. She is there. It says Christine Lagarde will replace the outgoing president Mario Draghi as November 1st of 2019. Whew, look at that. It says here, on the 2nd of July 2019, the European Council considered Christine Lagarde to be the appropriate candidate for the president of the European Central Bank. The Council, Economic and Financial Affairs, then issued a formal recommendation on July 9th, 2019. The European Parliament and the European Central Bank delivered their opinions to the European Council, respectively, on September 17th, 2019 and July 25th, 2019. And she was selected and she will kick in. It says here, the ECB Executive Board is responsible for the implementation of the Euro area monetary policy as laid down by the ECB Governing Council. It is composed of the President, the Vice President, and 4 members, all appointed for non-renewable 8-year term. The Government Council is composed of 6 Executive Board members and the governors of the National Central Banks of Europe era member states. So she's now in charge of the European Bank, the European Central Bank. She is now in charge of, okay? Now, she talked about the other appointees, and we have this little chart here. We see the president is Christine Lagarde. The vice president is Luis de Guindos. Other members of the ECB are Philip Lane, Fabio Panetta, Yves Mercier, and Isabella Chanabel. So we see they're there for 8 years. Their job is to basically move and shake and make things happen, okay? So they need to get through the crisis. And we know Christine Lagarde has literally said, the winds of change. We need to move forward. Don't you feel the winds changing? Time to move from the actual paper dollar to a digital dollar. It's all happening. They were expecting this crash. They were expecting it to happen. Again, never let a crisis go to waste. It came a little earlier than they thought. They thought 2022. But it's happening right now in the first and second quarter of 2020, and we're pushing that digital dollar forward. So are you shorting the banks? Right? Eisenhower said short those. Steve Eisman said short the Euro banks, and then he talked about the U.S. banks. So if they were being started to be short 6 months ago, my question now is what's going on with the U.S. banks, right? An article came out on April 1st, 2020 on Forbes.com, written by Jim Collins, and it states here, the U.S. bank stocks should be shorted. Ooh, sound the alarms. And I'll read the article to you, right? It says here, who is going to pay for all of this? With the market's focus on macro issues surrounding the U.S. government stimulus plans, 1, 2, 3, and possibly 4, the micro issue is much more clear. The U.S. banking system is going to subsidize the cost of the economic lockdown ordered by policymakers to mitigate COVID-19. So, in that scenario, bank stocks are radioactive. And I'm short several individual names and ETFs. For my firm, Accessor Capital Partners, he's short for his firm who he works for, a little plug. It says here, the big U.S. banks had it so good for so long, and unfortunately, the extraordinary economic slowdown and associated job losses for COVID-19 imply that those banks will be on the hook for delinquent loans from both customers and companies. It happens in every crisis, as shown by this chart of aggregated U.S. banking system loan loss ratios provided by the St. Louis Fed FRED database. And he doesn't have it in here. I should have pulled it up. I looked at it low. Anyway, I looked it up yesterday, and we were actually at a double bottom for the lowest interest rates before we start to skyrocket and people start to default. We're at that thing where people are already defaulting. We just don't see it yet. We don't see it yet, but it's there. He goes on to say, the problem here is with so many issues relating to the COVID-19 is recent biases. With the U.S. banking system aggregated net loan loss figure registering a minuscule 0.49% in the fourth quarter of 2019, it was the 22nd consecutive reading below 0.5% and the 26th consecutive reading below 1%. What are loan losses again? Oh yeah, they are charge-offs, net of recoveries, as a percentage of total loans outstanding. And he says, yeah, I remember those. Go back to I talked about the CDOs. Basically the junk bonds, the junk loans, kind of what he's talking about. And he goes on and he gives a bunch of data here. He says there's also a lag effect, which makes sense as corporates try to pull all the levers to avoid defaults, and individuals shift money and tactically made payments and try to avoid personal bankruptcy. Okay, again, it's all a delusion. It's all a distraction. President Trump is going to try to hold up the economy as long as he can until this digital dollar is ready to take effect, until the IMF is ready to flip the switch and the U.S. dollar moves. We see oil is down. The oil market, the petrodollar is going to collapse. We will still have a U.S. dollar to move between the U.S. or the euro or the Mexican peso, the Filipino peso, whatever other local currency or fiat that you use. And that's where XRP comes in, where we're able to transfer it immediately. But the U.S. dollar will no longer be a world currency. It will no longer be a world power. The world power will switch, and we will have someone else in charge. And he says here, he continues, from an accounting perspective, of course, loan losses have to be charged against the value of the bank's loan books, assets. And that charge needs to be run through the profit and loss, the P&L. So earnings estimates are too high for U.S. banks. I just made that blanket statement without looking into individual financial statements of JP Morgan, Citi, Bank of America, Wells Fargo, or any of the regional banks. It happens in every cycle, and it happens to every bank. I certainly can't think of any expectations in the last 30 years. So while stocks like JP Morgan and Bank of America are starting to look cheap compared to historical book value, using the most reported figures as of December 31st, 2019, the end of the fourth quarter, the markets have decided over the past 10 years that banks should be valued on earnings power, not those dry old concepts of net asset evaluations based on historical costs. However, that's the problem. And that's why he's shorting the U.S. banks for his company. While book value changes take quarters and often years to run through the P&Ls, charge-offs need to be recognized as soon as possible. There is no shady accounting here. Banks are by far the most regulated sector in the U.S. from an accounting perspective. Legislative reforms like Dodd-Frank and Sarbanes-Oxley have only served to increase the regulatory scrutiny on the U.S. financial system. We can argue whether that's a good thing systematically, but it certainly increases transparency for investors. Listening to bank earnings conference calls in April, you will find CEOs like JP Morgan's Jamie Dimon and Bank of America's Brian Mohana are free from the rhetorical flights of fancy so commonly used by CEOs in the sectors like Tesla, Elon Musk, and Salesforce.com's Mark Benioff. Bankers tell it like it is because they have to. Right now it's okay, but in the next few months, give the lag effects inherent in the default mechanism, it's going to get really bad. Whew. So what do you think? Are you short? Should we short these banks? And that's the question of today's podcast. Are we in the Big Short Part 2? Is the Big Short the banks? Is that the next Big Short? Now let me get real honest with you for a second. If you are an investor in cryptocurrency, Stellar, Lumen, XRP, BAT, Bitcoin, Ethereum, you are shorting the banks. You are shorting the economy. You are betting against the stock market. We can't sit at the big boys table, most of us, because we don't have an ISDA, right? That means we need $1 billion of capital to trade with the big boys now, to sit and make those big bets. We can't do that. But we do have the opportunity here to do it with just a little bit of money that we have, if you make the right call. You can use the crisis. Do not let a crisis go to waste. But here's the thing that sucks about it. We're going to see friends and family lose jobs, lose houses, lose businesses. That's the reality of the game we in. As investment people, we pick and choose winners and losers. When you short, you're betting against. When you're longing, you're betting for. I'm long on XRP and Bitcoin. Well, Bitcoin for a certain amount of time. Ethereum and a few others for a time, but I'm extremely long on XRP. In the moment, I'm in a short just to make, a little bit of money, right? But in the grand scheme of things, I'm long. I day trade, so you short and long, you make trades throughout the day. But if we're really shorting this market, people are going to lose houses. People are going to lose food on their table. You see it. 10 million plus people have now lost their job. But guys, if you're one of those people who lost their job, do your research. See what you can. This cryptocurrency market was created a long time ago, but really kicked off in 2009. In 2009. You can do it. You can make money off of this. Warren Buffett says the stock market, the same as the cryptocurrency market, the way it works, it's all about the transfer of wealth from the impatient to the patient. Be patient, guys. Be patient, do your research, and search it. That's why I started this channel. I started searching because of other people's YouTube, and I was like, you know what? Let me give this thing a shot. Let me put some information out there. So I ask you guys to reach out to me and let me know what you think in the comment section. We're on YouTube, like I said. You can also find us on the PublixOS website. Again, that's a blog place where you can find everything. We update it every single day. You can also find us on Twitter at New Creation Cap. Write to us, tweet to us, direct message me, whatever it is, follow us. Would love you guys. Thank you so much for following me. Also, again, you can find all of us on all of our content, just the regular podcast, on New Creation Capital Podcast. We can be found on the Ape. I'm all choked up, and here's why, man, because I'm seeing this affect people, even though I know the end result. I know we're going to be wealth, life-changing money, but I still have a heart for those who don't see it. I try to tell everybody I can, so please pass that message on. And if you know someone who can use this, there's a message button right here. Leave me a message. If you want to partner, you like what you hear, you can partner with us. Again, you can find us on Apple Podcasts, Breaker, Google Podcasts, Pocket Casts, Radio Public, Spotify, and of course, the Anchor platform. I want to leave you with one message. It won't be long. I'm just going to leave you with this that I've already used before. And it goes like this. It's Proverbs 3, verse 5 and 6. And it says, trust in the Lord with all your heart. Do not lean on your own expectation or understanding. Acknowledge him in all your ways, and he will make your path straight. So yes, I am a person who does the investments, but Lord and Jesus is first in my life. I give everything over to him, so I do not worry. But he's also given me a spirit of love and a spirit of hope and faith. And I have faith in him first. But I also have eyes. And he shows what is clear out there. We know towards the end of times that this is what's going to happen. Famine, wars, earthquakes, one world currency, one world government. We're all moving towards that, guys. I talk about that. But it's so important to understand. Yes, this is the New Creational Capital Podcast. New Creation, talking about the cryptocurrency and money. That's kind of, you see the logo right there. That's what it works for. It's about a vote, unlocking the key. This is a podcast where we discuss what happens in the world today. We talk about stories that focus on current events, the stock market, and digital assets. As we always like to say, I'm your boy Christian Israel. Make sure you buy low, sell high. This is a new you, a new future, and a new creation. Thank you guys for tuning in. Until next time, guys, peace and love. Later.